You know, when the largest health insurer in the United States lays out its game plan, it doesn't just stay in the boardroom. It sends ripples through the entire healthcare system. So today, we're going to unpack what's really going on inside UnitedHealth Group. Let's dive in and see what their plans are.
So the big question on the table is this. What exactly is America's largest health insurer planning for 2026? Well, they just had their big quarterly call with investors, and we're going to pull back the curtain and look at exactly what was said.
And just so you know, we're not speculating here. We're not guessing. Our source for this entire explainer is the official transcript from UnitedHealth Group's fourth quarter 2025 earnings call. This is the information they shared directly with Wall Street.
So here's what we're going to cover. First, we'll look at their financial report card. Then we'll get into the major challenges they're facing. After that, we'll break down their big strategy, which involves a lot of AI, see how analysts really grill them on it, and then, the most important part, connect it all back to what it means for you.
All right, first things first, the bottom line. How did the company actually do? Let's take a look at the numbers they just reported. So they wrapped up 2025 with an adjusted earnings per share of $16.35. Now, the key thing to know here is that this was just a little bit ahead of what Wall Street was expecting. So all in all, they ended the year on pretty solid ground.
But here's where it gets interesting. Looking ahead to 2026, they're guiding for an EPS of more than $17.75. I mean, that signals some serious confidence from their leadership team about the year they think they're going to have.
And this number right here, it really drives that point home. They are projecting a growth rate of at least 8.6%. So from a purely financial perspective, the picture they're painting is quite strong.
And hey, just a quick primer in case you need it. Earnings per share, or EPS, is just a super common way to measure how profitable a company is. It's one of those core metrics that investors watch like a hawk.
Okay, so the numbers look pretty good, right? But hold on, because it is not all smooth sailing. Despite those strong figures, the company's executives spent a whole lot of time on this call talking about some pretty serious challenges that are brewing. Let's dig into what those are.
What's really fascinating here is that they're facing a kind of perfect storm of issues. They talked about major funding pressure on their huge Medicare Advantage business, shortfalls in state Medicaid programs, and, of course, the fact that medical costs just keep going up. And on top of all that, get this, they're actually expecting to lose somewhere between 2.3 and 2.8 million members this year.
And listen, this isn't just me reading between the lines. This is a direct quote from the call about Medicare funding. You can just hear the concern in the language, right? Calling the news disappointing and pointing to a mind-boggling $130 billion in funding cuts to the program over just 3 years. That really sets the stage for everything they're planning to do next.
So you've got shrinking membership on one hand and rising costs on the other. How in the world do they plan to hit that optimistic growth target we just talked about? Well, this is where their core strategy for 2026 really comes into focus. And it all hinges on two things: technology and efficiency.
They basically laid out a 4-part plan. First up, a massive push into artificial intelligence to cut costs and, they say, improve service. Second, they're going to realign their giant Optum Health Services division. Third, they're streamlining their network of doctors to focus on something called value-based care. And fourth, it's a little bit of just getting back to basics on how they run the company.
And they didn't just talk about AI in vague terms. They put a huge number on it. They are anticipating that their AI initiatives will help them slash operating costs by nearly $1 billion in 2026 alone. That is a massive target, and it just goes to show how central AI is to their entire plan.
A second ago, I mentioned value-based care. So what is that exactly? Well, think of it as a shift away from the old model, where doctors get paid for every single test and procedure they do. Instead, this is about paying them based on how healthy they keep their patients. The whole idea is to get better quality care for less money. And it's a huge piece of UNH's strategy.
Now, company executives can get on a call and present any plan they want, right? But the real test, where the rubber really meets the road, is when the financial analysts get to ask the tough questions. Let's look at a really key moment from that Q&A session.
So an analyst from a firm called Nephron Research asked a brilliant question. He basically said, with all this pressure on Medicare Advantage, or MA, have we finally hit the bottom? And, more importantly, how on earth do you plan to make more profit when you're actively telling us you're going to be losing members? It's a fantastic, pointed question.
And the company's response was incredibly revealing. One of their executives basically said our strategy in 2026 did focus more so on margin than it did on any specific membership target.
The takeaway here is huge. They are explicitly choosing profitability over growth in the number of members this year. They are willing to actually shrink the company to become more profitable.
Okay, so that's all the corporate strategy talk. AI, efficiency, focusing on margins over members. But what does any of this actually mean for patients, for customers, for you? Let's try to connect the dots.
This whole strategy, it really presents a mixed bag of potential outcomes. On the upside, sure, that big AI push could mean you get faster answers when you call customer service, and that focus on value-based care might mean more help with preventative care. But, and this is a big but, there are some major potential downsides that they mention themselves on the call. They use the exact phrases meaningful benefit reductions, a streamlined network which means less choice of doctors, and affordability challenges, particularly for seniors.
And that really leaves us with this final critical question. As these healthcare giants like UnitedHealth Group lean so heavily on AI and efficiency to protect their bottom line from all these rising costs, where is that impact truly going to be felt? Will we as patients actually see the benefits in our care or in our wallets? Or will this intense focus on margins just lead to leaner benefits and tougher choices? That really is the multi-billion-dollar question for 2026 and for all the years to come.